So, your topic is income tax. So, you have income tax 1 in your syllabus. So, before moving to your syllabus, let us first know when did the income tax has been come into force. Before that, let me tell you an history. See, in 1847, a person named as James Wilson, he went to a war and he incurred a very big loss. So James Wilson was a British ruler in India. So after going to a war, he incurred a very big loss. So a queen called as Elizabeth in India said him, I don't know how you're going to recover all the loss incurred by you, but you have to recover all this amount. And then what happened is, at that time, after receiving a signal from the Queen Elizabeth, they started collecting a tax from the people. So on whatever they sell, whatever they buy, whatever they earn, whatever it is, you have to pay me the tax, and you can do anything. So at that time, the tax has come into force. So, but in India, in the year 1961, they passed a special legislative called as Income Tax Act 1961 in the Parliament. So after getting a majority of the votes in the Parliament, the act was being passed. So simply, if you want to know any provisions, any amendments, any rules, you can simply refer the Income Tax Act of 1961. And one more thing I would like to tell you. See, let us assume that we are in a year 2019. So let us assume that this is our year. So this will be our financial year. So whatever the income you earn in the year 2019, you pay this tax for that income in the next year. So what is the next year? It is 2020. So this will be our next year. So this year we call this year as assessment year. Why do we call this as assessment year? Because in this year we are paying the tax. That is why we call it as assessment year. And this previous to this assessment year is known as previous year and also a financial year. And one more thing I would like to tell you, for us, for accounting, for accounts or for banks or for any companies, the financial year is, I hope everyone knows this, it is 1st April and ends with 31st March. I hope everyone knows this. As a accounting student, as a commerce student, you have to know this. So, 1st April of this year. So, which is this year for us? I told you the example that let us consider our year as 2019. So, for us, this year is 2019. And when does this end? Next year of 31st March. Will you get March after April? No, right? It is before, right? So, on next year, it is 2020. So, 2019 to 20. This is our previous year. So, which is our assessment year? Our assessment year is 2020 and 2021. So, please remember it is If anyone asks you what is our assessment year, you have to tell it is 1st April 2020 to 31st March 2021. If they ask what is the previous year, you have to tell it is 1st April 2019 to 1st to 31st March 2020. I hope you got this point. So now, a person, why should a person pay the tax? Why should you pay the tax? Do you all know that a person who earns the income should pay tax? Should he pay the tax or not? Yes, it is compulsory for him to pay the tax. Why? They say it is your obligation to pay the tax. It is your duty to pay the tax. As a citizen of India, you have to pay the tax because you are earning in India and you have to pay the tax to the government. But why? It is your money. You have earned it. Why should you pay? See, suppose I am earning 50,000 in a month. Okay, 50,000 in a month. And for a year, it will become 6 lakhs. The government will ask me to pay the tax, right? But why I have to pay? Answer is because the government are giving you many facilities. You ask for a subsidy cylinder, you want subsidy cylinder. You want public transportation. You want street lights. You want road to walk. You want park. You want to exercise in park. And there are also gyms in park nowadays. So these many facilities government are giving. Are they going to give this for free? Will they give it for free? Answer is big no. You only you will also not do anything for free. You won't do anything for free, of course. Then why did the government does it? So in order to take all the facilities, you have to give them the money. So that money is in a form of tax. So whatever the tax they collect, who collects? The government collects. So for them, it is a revenue. It is a profit for them. So through that amount only, they will provide you all these facilities. If you do not pay any tax to the government, then you are not eligible or you don't have any rights to ask for these facilities. Not only these facilities, there are many facilities which the government are giving. So coming to your syllabus, income tax is being divided, not income tax, the tax. The tax is being divided into two types. There are two different types of tax. The one is the direct tax. Another one is the indirect tax. So first let us understand what is the meaning of a direct tax. I'll give you an example. Suppose I am earning 50,000 a month and for a year, okay, not 50,000. Okay, I went to Goa and there was a lottery competition which were going there and I also participated in that lottery competition and there I got 10 lakhs lottery ಹೊಡೆದು ಬಿಡ್ತು ನನಗೆ 10 lakhs. Now what did the Indian government will ask? Give me 30% of this 10 lakhs. Give me 30% of this 10 lakhs. Right? What will be 30% of this 10 lakhs? It will be 3 lakh. Have to give him 3 lakhs rupees from my amount. Now, I'm not willing to pay 3 lakhs to the government. And I tell my friend, see, I have got 10 lakhs. I will pay you 1 lakh. You pay 3 lakhs to the government. Will she pay? Will she pay to the government? No, right? ಅಲ್ಲ ನನ್ಗೇನ್ ಹುಚ್ಚಮ್ಮ It is your money. You have earned it and you have 10 lakh. Why can't you pay 3 lakh to the government? You only pay. She will tell, right? Yes. So in short, we can tell direct tax as the incidence and the impact will fall on the same person. Can't you remember these two words? Incidence and impact. Only two words. See, this is the compulsory question in your question paper. So if you see previous 10 years paper, either there will be direct tax or indirect tax question. So without this question, there is no such paper. In case if you do not get this question, it is a bad luck. So there is a 80% of chances to get this question. So just you have to remember two words, only two words. What is the two words? The incidence and the impact will fall on a same person. If I am earning the income, I should only pay the tax. No one will pay the tax. Now coming to the indirect tax. Here the incidence and the impact will fall on both the person, will fall on the both the person. What ma'am is this? What is this? What incidence and impact will fall on both person? What does it mean? That means two people should pay the tax. No. Let me explain you. See, there is a shop, a manufacturer is manufacturing and selling a marker. Is selling a marker. At what price? At 25 rupees. So when he sells, he takes sales tax. When he sells anything, I have to pay the sales tax to him. So while purchasing that 25 rupees, if you buy any pencil, any pen or any marker, any book, there will be inclusive of tax. Even if you buy the chips also, there will be. Next time when you buy, you see that there will be inclusive of tax. What does it mean? You're paying tax to them. In 25 rupees, the tax have also been included. Do you know that? Are you paying the tax or not? No, you don't know. Without knowing, you're paying that. Now you know. Now you know that I'm paying tax. Okay. So this is known as an indirect tax. What is the best example you can give for an indirect tax? Yes, it is GST. What is the best example you can give for a direct tax? Of course, it is a direct. Of course, it is a income tax. The best example for a direct tax is a income tax. Not only income tax, wealth tax. What do you mean by wealth? Ashti. If you buy gold, if you buy land, on this you have to pay the tax, right? For example, for indirect tax, you said it is GST. Of course, it is GST. See, before, if you go to any movie theater, there was something called as entertainment tax. There was something called as entertainment tax. But now they have removed this. Instead of paying entertainment tax, they are paying GST. All it is been included. The sales tax is been included. The entertainment tax is been included. VAT has been included in GST only. So here, this is not important for you, but still, I'm telling this for your general knowledge. Whenever you pay a tax, the central and the state will distribute. If it is 18% of the tax, 9% for central, 9% for state. I hope you know this concept before only. Now let's come to your syllabus. It says that income tax means a tax which is levied on an income earned by an individual. So on what basis you have to give the tax? If your income is above 5 lakhs rupees, you have to give the tax to the government. Who will collect the tax? In India, the tax is collected by the government of India. So you will be paying the tax directly to the government of India, sitting in your home only. If you want me to show the process of how the tax is being collected, I'll show you now. Okay. So the tax collected by the government. So we call them as a central board of direct tax. So the head is Ministry of Finance. So, so the head is Ministry of Finance. For you, your syllabus is like this. So your unit 1 is Introduction to Income Tax. Unit 2 is Residential Status. Here you will be studying whether he is a resident of India or a non-resident of India. And in your syllabus, there are also some exempted incomes. Exempted incomes mean even if you earn more than 5 lakhs or more than 10 lakhs, these incomes are exempted in Income Tax Act of 1961 that you will study. And in income from salary, whenever you work in any company, they will provide you salary, obviously. So how the salary is being computed? And if there is any PF which is given, how do you compute? And if there is any gratuity is given, how do you compute? And if the company is giving any house property for their employees, how do you compute? So all these things. The next unit I is income from house property. Suppose you have three land and you have three land and you have built a house and you have given the rent. Now we are receiving an income in a form of rent. So how do you calculate that amount to pay the tax? So these are the topics which you learn in your syllabus. There are other forms of income also which will be in sixth sem. So I'll just tell you what are they. So see whether if you are now you are studying. After that you will go to any business. You may practice any profession as a chartered accountant or a company secretary, or maybe you will start your own business like Infosys, any other thing. Again, you will get profit in that business. So, where you will put that profit? Will you put it in your residential status? No. Will you put it in your salary? No. Will you put it in your house property? No. Where you will put? You will put it in profit and gains from business or profession. The next one is capital gain. So, what is this capital gain? Suppose I have a gold ornament. Suppose I have a diamond necklace. I sell it. I brought it at 10 lakhs rupees and I am selling it today at 1 crore rupees. Is it a gain for me or a loss for me? Of course, it is a gain for me. So, where shall I put? Shall I put it in profit and gains from business or profession? No. Shall I put it in salary? No. Shall I put it in house property? No. I have to put it in a capital gain. So, it is a capital gain. When do we say it is a capital gain? When you purchase land or any long term asset and you are selling it at a very high price than you have purchased, then we say it is a capital gain. So capital gain normally occurs if it is a long term asset like gold, like land, like that. Next is income from other source. In income from other source, what happens? You have you have gained some amount, but that amount is not from salary also, house property also, business also, profession also, capital gain also. Then you will put it in the other source. Let me give you an example. I said you have gone to Goa and I have won 10 lakhs rupees and government is asking me to pay 30% of the tax. Now, where should I calculate the 30% of the tax? Shall I calculate in the salary, income from salary? No, I can't. Shall I calculate it from house property? No, I can't. Because house property, whatever the rent you have received from the house property will be calculating there, and whatever the PF amount, gratuity, house rent allowances, that you will calculate in the salary. Now, whatever the income you receive in a profession, as a profession, you are a lawyer, you receive any fees from your clients that you will charge in profession. And you have your own business. You got 1 lakh rupees of profit. Now that you will charge in profit and gain. You have sold your gold ornament, which you have purchased at 10 lakh and you are selling it at 1 crore. It is a capital gain for you. That you will compute here. But lottery, they do not come under capital gain, business or profession, house property and salary. So the government of India, that is the Income Tax Authorities Act of 1961, tells that whatever a income which is not to be included in all the four heads, that has to be charged in the other source. Salary to MPs and MLA. Where do they come? They come under salary, income from salary? No, they will come under other source. Why? That you will be learning in your later sixth sem only. Don't worry much about that. Because salaries for MPs and MLAs are not in a form of salary simply because they arises they arises without any employee and employer relationship. If there is any employee and employer relationship, we call it as a salary. A person called as A, who is MLA, is receiving a salary. Is, he, is there any employee employer relationship? No. So we calculate it in a income from other source. Don't worry much about that. You will be studying in your later stage. Next is set off and carry forward of losses and deductions from gross total income and income tax authorities and assessment of individuals. So don't worry much about these two. See, in income, you have how many heads? How many heads? You have income from salary. You have income from house property. You have income from business or profession. You have income from capital gain. You have income from other source. So total you have 5 heads of income. So whatever income you earn in the 5 heads, whether it may be lottery, whether you have purchased the gold and you have sold it, whether you have practicing any profession and you have earned the amount, whatever it is, you have earned the rent or maybe a salary, then you have to pay the tax to the government. If it is the 5 heads. Now coming to why do they collect the tax? I told you the government is providing you many services like healthcare, you want free education, you want proper employment, you want good infrastructure in the buildings, you want a social security, you want a navy, you want everything. So in order to give you everything, they take the tax from you. So the major revenue for a government is tax. So in short, I can say the government collects tax to perform or to facilitate or to provide you the facilities, and this is a revenue for them. Next is the difference between indirect tax and the direct tax. So first, I told you that the direct tax, the incidence and the impact will fall on the same person. In indirect tax, the incidence and the impact will fall on both the person. Now coming to how are they paid? So in direct tax, these taxes will be paid directly to the government of India by the people. I will show you how they are paid. Next is indirect tax. So these tax are indirectly collected from the people. That is the intermediary is collecting the tax. Whenever you go to a supermarket, you buy many chocolates, many biscuits, chips and all, and you pay to them. Then they give the bill. There is something called a GST, CGST and SGST, right? The next one is common examples for direct tax is income tax, property tax, corporation tax. Whenever you purchase any properties, land, you have to pay the tax. And indirect tax. Examples are GST, custom duty, sales tax, entertainment tax. Now there is no entertainment tax, sales tax, which they have combined it into GST. Next, imposed on. On what should I pay the direct tax? On the income which I earn, on the profit which I get. What on what should I pay the indirect tax? Whatever you consume, it may be a goods, it may be a services. On that you have to pay the indirect tax. But who will pay the direct tax? The individual who is earning income and the business who is earning profit will pay the tax. Now tell me whether the money which the businessman will earn, is it a income for him or a profit for him? Of course, it is a profit for him. It is not the income. He is not receiving any salary. It is a profit for him. And who will pay the direct tax? End consumer. Suppose I go to shop, I purchase a chips and I eat a chips, I will become an end consumer. I can't sell someone that open chips. No one will eat it. Maybe my family or my siblings will eat. Not any outside persons will eat. Transferability. I told you that if I am earning the income, I should only pay the tax. I can't tell my friend or any outside or any stranger person to pay the tax. So it is not transferable. In direct tax, it is transferable. That means if I go to a shop and I ask him to give me a dairy milk chocolate of 100 rupees and I tell my friend to pay the tax, to pay the money for him. Now, who is paying the money to the shopkeeper? I'm not paying, my friend is paying. So, here it is transferable. I hope you got this point till now. Now, let us learn about an assessment year. So, an assessment year means a period of 12 months starting from the first day of April of current year and it will end in the 31st March of the next year. So, here it is saying that assessment year means the period of 12 months starting on the first day of April every year. It is a year just after the previous year in which income earned in the previous year is charged to tax. Example, our assessment year is 2020, 20 and 21. This 2020 has played a very big role this time. A very big role it has played in our relatives, families, friends, everything, right? Okay. It starts from 1st April of 2020 and ends on 31st March of the next year, that is 2021. This is your assessment year. And income earned in the year 2019 and 2020, that is a previous year. In that, the income, whatever income you earn in a previous year will be paying tax in your assessment year. Simple. So, in short, it comprises of 12 months starting from 1st April and ending 31st March. So, the relationship with the previous year is it falls immediately after the previous year. So, for what for what you need this assessment year? You need this assessment year to pay the tax. So, for us, the previous year 2019 and 20, our assessment year is 20 and 21. Okay, you know this now. So, what is a previous year? I told you that it also comprises of it also comprises of 12 months only. It also comprises of 12 months only, and it also starts from 1st April and ends on 31st March only. But the previous year, so it is the current year is 2020, and the previous year is 2019 and 20. Simple. It is also known as a financial year 1920. And the assessment year for a previous year is 2018 and 19. And the previous year for the assessment year is 2020 and 2021. Don't worry much about this. Now let us learn about the assessee. So who is a assessee? I'm sorry for the handwriting. It is A double S double E S S E E A S S E S S assessee. So a assessee is a person. Who is assessee? A assessee is a person who is paying a tax. A person who pays tax is called as assessee. And also we can say it as assessee is an individual. Assessee is an individual who pays the tax to the government of India or to the income tax authorities. So as per Income Tax Act of 1961, it is said that the assessee is a person who is paying the tax to the government. And in this assessee, we have two types. Let us learn one by them. The first one is assessee by default. Assessee by default. And the next one is deemed assessee. And the next one is deemed assessee. Okay. So first let us see what is assessee by default. Suppose the Income Tax Act of 1961 has told that every individual has to pay your income tax has to pay your tax by the end of by the end of July 31. The income tax has told that every individual has to pay the tax by the end of July 31st. Suppose I have earned an income of rupees 5 lakh, sorry, 10 lakhs and have failed to do so. Have not paid the tax. Have failed to do so. Now I will be called as a assessee by default. It means a person who fails to pay a tax is known as a assessee by default. Simple, right? See, this also they will ask for 2 marks. They may ask compulsory questions. Assessee by default. Who is the deemed assessee? Or what is direct income? What is direct tax? Or what is indirect tax? They may ask. Just a 2 marks question. Okay. Now coming to the deemed assessee. A deemed assessee is a assessee. A deemed assessee is a assessee where there there he will be not paying the tax, but his principal will be paying the tax. That means there will be a transferability of tax. There will be a transferability of tax. What, ma'am? In previous slide, you have told that the tax cannot be transferred to any person. Now we are telling that a transferability of tax. Don't worry, I'll explain you. Suppose, let us assume that A is a person who is in the age of minority. Minority means who is in a below age of 18 years. He is just 10 years old. Okay. And my grandfather has transferred all his property to the name of A. And A is my son. Let us assume that A is my son. And my grandfather has transferred, not my grandfather, my father. My father has transferred all the property to the name of my son. Okay. Now he is earning income. He is earning income. Now will he pay the tax? No. You know that any person within the age of 18 years is known as a minority. Is still in a minority. Now, is he exempted from tax? No. The government is very the government is very good at this. They said that okay, your son is in the age of minority, but you are his mom, right? You paid a tax to me. You paid a tax to me. So that means we call it as a deemed assessee. A deemed assessee is a assessee where a person will not be paying tax, but his principal will be paying tax. For my son, I am the principal. So here I will be paying tax. That means in short, there will be a transferability of tax only in case of deemed necessity. Now, now let us move to the next one called as person. I have been telling you person. The Income Tax Act of 1961 has clearly said that who is a person, who should be a person. The first thing is it can be any individual. It can be an individual. It can be I, or it can be you, or it can be any other person. But the person should be having a income. Now you are a college student. You are going to college and you are coming to college. You don't have any sort of income. Here you are not a person or any individual because you are not having any income. But tomorrow you will be going to job, you will be earning salary, then you will be called as a person. Now, any body corporate or undivided Hindu undivided family. What do you mean by Hindu undivided family? Will everyone watch serial? Will everyone watch serial? I think girls do watch serials a lot. Okay. What happens in serial? At least hero will be having a big company, a big business. So that business will be followed by their grandfather, great grandfather, and their father. And now his son will be looking at after business, right? This what happens in the serial. So here the head of the business is the one who is called as Karta, grandfather. A Karta. He is the head of the family. So here the business has been transferred from one person to one person to one person. So we call it as a Hindu undivided family. Okay, clear? So even a Hindu undivided family is called as a person. Next is association of persons. What do you mean by association of person? Association of person means any business, whatever business it may be Infosys, it may be Tata company, it may be CGL, whatever it may be. It is association of person. The next one is partnership firm. Partnership firm. I'm not telling partners because partners are different and partnership firm are different. Partners will not pay the tax. Partnership firm will pay the tax. Remember, partnership firm will pay the tax on what? Whatever the profit they get. On whatever the profit will they get, they pay the tax. Next, I'll erase this. I'll just erase this. The next one is any local authority. The fifth one is any local authority. He can be any person. He can be MP. He can be MLA. Whoever it is. He should also be considered as a person. Okay. I hope you are clear. This will also come for 2 marks. This will also come for 2 marks. They will ask, who is a person? You should just answer. A person, according to the Income Tax Act of 1961, includes any individual and Hindu undivided family, association of person, a firm, a company, or any partnership firm, or any local authorities. Just for 2 marks, you can't remember individual. Can't you remember Hindu undivided family? Can't you remember firm? Can't you remember company? If you write any three of this also, you will get 2 marks. You will get 2 marks. Okay. Now let us move to our syllabus. Okay. Coming to our syllabus. It is assessee. Assessee in the Income Tax Act of Section 2, subsection which is not, this section is not important to you. Okay. Assessee is said as a person who pays the tax. And who is a deemed assessee? A deemed assessee is an assessee under any provisions of this act where the tax can be transferable and their principal will be paying the tax. And who is an assessee in default? Assessee in default is a person who was liable to pay the tax but has failed to do so. The next one is a person. According to the Income Tax Act of 1961 under Section 2, Subsection 3, a term person includes the following: an individual, a Hindu undivided family, a CUF, a company, a firm, an association of persons, a local authority. Every artificial person not falling with any of these preceding categories. Okay, the next one is basic principles for charging a tax. Okay, the income tax will charge a tax from individual. So there is a rules, there is a guideline, there is a principle. Let us see one by one. The first thing is income earned in the previous year is charged for tax in the immediately following assessment year. So what is your assessment year? I said you it is 2020 and 21. So your previous year is 2019 and 20. So whatever income you earn in the year 2019 and 20, you paid a tax in assessment year 2020 and 21. Now, second one, it tells that the Finance Act will provide the rate of tax in respect of a certain income. See, every year, February, there will be an announcement of budget. It may be in the first week or it may be in a second week or third week. They will announce a budget. In that budget, there will be given a slab rate. There will be given a slab rate. On that slab rate, it will be included for the next year, not for this year. You remember this. Today is February. They have announced the budget. They have said that 10 lakhs exemption limit is there. So up to 10 lakh, there is no charging of tax. So if your amount exceeds 10 lakh, you have to pay 10% of tax. So you will be confused. Ayo, we are learning 5 lakh of amount. They are saying 10 lakh. Don't confuse because whatever the budget that they have given, that will be for the next year. Next third point, the Income Tax Act itself has prescribed specific rates. Yes, see, for lottery, they have to pay 30% of tax. And for long term capital gain, that is, if you sold any gold or any land and which is more than your purchased amount, then you have to pay 20% of tax. If it is any short term capital gain, it is 15%. You have to pay 15% for that. So, these are the basic principles of charging income tax. And I hope this much basics is enough for you. So next we will start with an agricultural income, which is very important for 6 marks, which is very easy also, and which is a compulsory question for 6 marks. You will definitely get that. Next class we will start with that.